Good morning. Welcome to Catex TV. My name is Frank Fortunato. Today is Friday, April 29, 2016. If you want to follow us on Twitter, please go to Catex TV. The second biggest reinsurer in the world, Swiss Re, reported a 14.3% year-on-year dip in group net profits, down to $1.2 billion for the first quarter of 2016, but it still comfortably beat analysts' expectations. One analyst said that the results were, quote, solid, noting that the profits were some 29% better than consensus estimates. The group's combined ratio increased 7.8% from the prior year period up to about 93%. Gross written premiums increased 13% to $11.5 billion. They reported a strong return on investments of 3.7%, which is a pretty good rate of return these days. There were no major catastrophes during the period, meaning the contribution to the combined ratio from natural cats came in at about 6 points lower than expected. They noted that in the first quarter of 2016, they'd been impacted by rate reductions and the unfavorable development of earthquake losses in New Zealand. Aon's reinsurance broking arm, Aon Benfield, reported organic growth of 1% in Q1, compared to a dip of 1% in the same period a year ago. The global broker's results also indicated that its broking segment, Aon Risk Solutions, which combines both insurance and reinsurance broking, posted a 3% organic increase. They also noted that it had achieved 4% organic growth in the Americas, driven by record new business generation in U.S. retail and expansion in its affinity division. Arthur J. Gallagher, based out in Itasca, Illinois, impressed with first quarter organic revenue growth that was pretty solid. The company reported overall organic growth at about 4.8%. This included an increase of 3.5% in brokerage on base commissions up to about $663 million. There was a net loss of $29.9 million in the company's corporate segment. This included a $3.7 million expense related to its litigation settlement last year over the departure of its former UK head, David Ross. A helicopter heading back from an oil and gas field in offshore Norway crashed outside of the city of Bergen on the country's west coast this morning. The CHC helicopter was carrying 13 passengers and crew when it went down around noon earlier today outside Bergen. It was returning from the Gulfax B platform. Rescue has been mobilized. However, there's been no word on any survivors. Official results from the European statistical agency Eurostat came out earlier today, showing that the Eurozone, which is the world's second biggest economy, had accelerated unexpectedly in economic growth at the beginning of this year for the first quarter. It now brings the Eurozone back to the level it was before the recessions of the past 8 years. It expanded by a quarterly rate of 0.6%. The increase was double the previous quarter's rate and ahead of market expectations for 0.4%. They still have unemployment problems. The unemployment rate is 10.2%. It's 3 percentage points higher than it was in 2008 when the crisis began. The U.S. reached pre-recession levels in 2011. Shooting and violence have been reported in parts of Venezuela as the country continues to face widespread food and power shortages that has forced the government to ration food and electricity. Several towns and cities, including the second biggest city of Maracaibo, were hit by rioting Tuesday and yesterday after daily power cuts began on Monday. In a survey published by the polling company Barometro, 13% of Venezuelans said their households only ate once a day. Another poll indicated more than 66% of the country wants the president, Nicolas Maduro, to resign. Maduro blames the situation on an economic war against the country by capitalists. The real problem is that the collapse of crude oil prices have worsened the economy of Venezuela, which has the world's largest oil reserves. Australia apparently is in a little bit of a spat with the Chinese. The latest chapter is a protracted back and forth over the sale of an Australian company, Kidman and Company. The Treasurer of Australia, Scott Morrison, indicated this morning that he is poised to block the sale of Kidman and Company to a Chinese consortium. The reason is that Kidman and Company is an agricultural giant that owns an immense amount of land. Morrison has told Daking Australia Holdings, which is led by the Shanghai-based Penjing Group, that he's concerned with the size and significance of the $285 million purchase, which amounts to 1% of Australia's landmass. Kidman is a family-owned business founded about 115 years ago by the so-called cattle king, Sidney Kidman. It controls more than 11 million hectares of leases and owns about 185,000 cattle. The decision by Morrison to reject the deal is the second time he snuffed out a Chinese bid for Kidman. In the first instance, 4 separate groups linked to Chinese investors had been vying for all of the Kidman property, which is an area about the size of the state of Kentucky, or 2.5% of Australia's total farmland. The treasurer put the kibosh on that sale because a large part of the land was within the Woomera prohibited area, which is a weapons testing site in the state of South Australia. That's the news for today. If we have any breaking news, we'll come back and tell you. Have a pleasant weekend, and we'll see you Monday.